Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the corporate world. Today we're cracking open Yoshiharu Global's annual report, and let me tell you, it's a bit like a spicy ramen bowl. Lots of interesting ingredients, but are they going to cook up a tasty profit? Well, stick around and we'll find out. This fast-growing ramen chain is trying to bring modernized Japanese dining to the world, but there are some twists and turns in this financial report that you need to know about. First off, Yoshiharu specializes in Japanese ramen. They've been growing quickly in Southern California, and they even ventured into Las Vegas by buying 3 existing restaurants. Think warm, hearty broth boiled for 12 hours combined with fresh ingredients. The company aims to make this comforting meal accessible to the mainstream. But expansion comes with challenges, like everyone else. They're dealing with supply chain issues and inflation. It's getting more expensive to source key ingredients like canola oil, rice, meats, and fresh vegetables. Imagine your favorite ramen getting pricey because the ingredients are hard to find. Yikes. The company is trying to balance this by increasing menu prices and finding more efficient ways to manage their supply chain. But those inflationary pressures are expected to continue, so they have some difficult decisions ahead. Despite the economic challenges, Yoshiharu highlights a few key strengths. They believe their experienced management team, compelling value proposition, attractive restaurant-level economics, and high-quality food set them apart. What do they want to do? New corporate-owned restaurants are in the plan with a goal to fill in existing markets and expand into new geographies, but new restaurant growth is impacted by a number of risks beyond their control. It's not just about new locations either. They're also looking at consistent, comparable restaurant sales growth, new menu items, and even a larger format restaurant with a safe bar concept in the works. Let's take a look at some locations. As of the end of 2024, they operated 12 restaurants in California and had 1 location under construction and acquired 3 existing restaurants in Las Vegas by an asset purchase agreement. The company opened 1 restaurant in each year from 2019 through 2021, and they have opened 2 restaurants in 2022, 2023, and 24 respectively. They estimate it takes about $350,000 to $550,000 to get each new location up and running. Although it has been closer to $484,000 to date, that's a significant investment per restaurant, which makes unit volumes susceptible to results of operations. Now, the company believes increased multiculturalism in the United States, driven by growth in the Asian demographic, contributes to a favorable macro environment for Yoshiharu's future growth. But these projections are based on trends and assumptions and may not materialize. The market's tough though. Yoshiharu faces significant competition. Jinya Ramen Bar, for instance, operates many locations in the United States and also franchises their restaurants. To compete, Yoshiharu believes that they must ensure a high dining experience to ensure repeat customers. But what are some risks they have? Well, that's in the risk factors section, so let's take a look. First, the company has incurred operating losses and may not be profitable in the future. Their plans to maintain and increase liquidity may not be successful. Put simply, they've been losing money and it might not get better anytime soon, raising questions about their long-term survival. They must raise capital through the sale of equity in order to continue to sustain our operations. There's also a risk that the company's stock could get delisted from the Nasdaq capital market if their stockholders' equity fails to comply with the continued listing requirements, which would limit the public market for our stock. It could also greatly impair their ability to raise additional necessary capital through equity or debt financing. Another key issue is their ability to secure appropriate sites and expand in existing and new markets. If they can't find the right locations or develop them quickly enough, their growth could stall, also increasing the chances that their new restaurants may not be profitable. Also, the restaurant base is geographically concentrated in California, so they could be negatively affected by conditions specific to California. Whether new laws and regulations could all affect how they operate. Food safety is a big one too. Foodborne illness concerns could have an adverse effect on their business, financial condition, or results of operations. One instance of foodborne illness could impact their national sales. The minimum wage, particularly in California, continues to increase and is subject to factors outside of their control. The risk of a data breach is real too. Security breaches of confidential consumer information related to their electronic processing of credit and debit card transactions, as well as a breach of security of their employee information, could substantially affect their reputation, business, financial condition, or results of operations. Now, let's dig into the numbers. Revenues were $12.8 million for the year ended December 31, 2024, compared to $9.2 million for the year ended December 31, 2023, representing an increase of approximately $3.6 million or 39.3%. That sounds great, but here's the catch. The sales bump was largely from buying those 3 restaurants in Las Vegas. What that means is that existing restaurant sales have declined. The next figure is food, beverage, and supplies costs. These were approximately $3.4 million for the year ended December 31, 2024, compared to $2.4 million for the year ended December 31, 2023, representing an increase of approximately 1.0 millions. Just like before, the big increase here is because of the increased scale with their new Las Vegas business. A trend is building up. Let's look at the general and administrative expenses. These were approximately $3.8 million for the year ended December 31, 2024, compared to $3.4 million for the year ended December 31, 2023. This led to a loss from operations of $266. That's an improvement, as 2023 was $3.5 million. This also means that for every dollar in sales that they've been making, they've been losing money. This leads to a loss before income taxes of $2.06 at 3 improved from the year before. As previously there was a $3 million loss. All those efforts to improve are paying off but have yet to reach success. Next, net cash provided by operating activities during 2024 was $87,224. This was primarily due to decreases in other assets. In 2023, the company had nearly $4.6 million used in operating activities. It appears that this year the cash usage was kept more in check. Cash flows from investing activities has more than doubled from 2023 to 2024 and used over $2.25 million. What was it used for? It looks like they have been expanding their restaurant stores. This means that while their business is bleeding cash, they are still pursuing growth. To summarize, Yoshiharu Global is working to expand its business with new restaurants to increase their reach, but they're going against a lot of challenges, such as rising costs, financial obligations, and the struggles in the Nasdaq capital market listing. One positive move they've made, however, has been in security. The company has stated they have an information security program designed to identify, protect, detect, and respond to, and manage reasonably foreseeable cybersecurity risks and threats. It also looks like the audit committee receives periodic reports from management on potential cybersecurity risks and threats. We have already seen the struggles with opening new stores, or even keeping their current business afloat. It's good that they have a goal to expand, but it sounds as if stabilizing what they have should be the focus. It will be important for potential and current investors to keep an eye on new financial reporting to see if the tides are changing or if this company is going to sink. We're just decoding what we see here, so let me know your thoughts in the comments. Don't forget to like and subscribe for more takes in the corporate world. Thanks for watching.